What's going on? It's Ryan here, CEO and head quant here at HappyTrader.io. Today we're going to do the long and short backtest year-to-date 2023 for the Ethereum futures contract on the CME, and we're just going to get right into it. You can see that right now we're looking at the 45-minute chart, and you can see just a preface before we get right into the strategy, there will be some bad news that's going to progressively become good news. So stick around for that one. Make sure you hit like and subscribe if you want to support a startup that's into this kind of thing. And you can see, just preface number two, that there's a lot of room on these moves to get in and out of trades. So we're just going to overlay our strategy, and we'll go back to the chart, and you can see that we are going to be buying one contract. So buy AI plus one on the uptrend signal. And you can see above that, it says close entry order, sell AI. So what we're doing is we're taking a long when there's an uptrend, and then when there's a downtrend, we're going to then sell that buy AI signal, and then we're going to take a short, right? So we're just going from signal to signal. Preface number three, this is not how we designed HappyTrader to trade. Everybody has their own unique risk tolerance, and we actually designed HappyTrader to be an educational product. So regardless of your trading style, this is going to show you that our signals are going to give an overall positive expectancy with the chance for you to be able to take profit early on in the trade should you deem fit. So with that being said, let's get into the bad news, and then we'll slowly get into the good news, and we'll kind of explain why everything is happening the way that it is. So let's get into a 45-minute chart. We have up the Ethereum futures contract. We have deep backtesting turned on, so that's going to allow us to do a timed backtest, meaning dated. So we're going to do from January 1st, and then we are going to jump into Thursday, December 28th, and that's today's date, right? So we're good to go. Let's go ahead and generate a report. Let's make sure that all of our criteria are okay. Initial capital, one contract, pyramiding off. So, small account, one contract, right? That's what we're doing. Now you can see, don't click off the video because it gets better. You can see here that we have a negative expectancy, right? So that's just going signal to signal. Now, however, if you actually go to the signals themselves, you can see that there's plenty of room for accuracy and to take scalps and stuff like that. Now, a lot of times, depending on your risk tolerance, you may want to wait for a pullback on a signal and then take your position and then scalp. It's all up to you. But what you do want to make sure you do is hedge, and you want to make sure that you are using risk management techniques of some sort. That is paramount in trading. You don't just want to take an Ethereum futures contract, throw it on, and then just like go to bed, right? So this back test, take it with a grain of salt. Even when we get to the good part. Now let's go into the 45-minute chart. Why do we have a negative expectancy? Well, first off, we've had an upward market this year, right? So a long and short back test is going to have a negative expectancy. The other part of it is that this is Ethereum, this is cryptocurrency, and we're not fully correlated with the equity indexes yet, right? So on our very long time frame, just signal to signal, just lazy man's trading it, we do have a negative expectancy. But let's go into the list of trades because looks can be deceiving. Now, you can see that, our, win rate is kind of what we're used to seeing on HappyTrader. But here's the good news about that negative expectancy. Here's all the room that you would have had to scalp these trades. And look, it often cases the run up surpasses what the signal profit or loss would be, right? So that's pretty crazy. Like, look at the run up here, $4,800. I don't know about you, but if I make, $2,000 on one Ethereum contract, I'm probably pulling it off, right? So that's where, you can get into kind of, that's where back testing is good, right? You can really assess, even with the dumb man's way of trading, just the signal to signal to signal to signal, just robotic, which nobody really is going to do in real life. We are able to see just kind of these opportunities. So we have 145 closed trades, and you can see just these massive run-ups, right? So that's really cool to have a negative expectancy, but know that on a longer time frame, if you're more of a swing trader, you can take these run-ups, you can take your profit and run, and if you just look at the signals, you'll be able to see that, they're pretty darn accurate as far as, especially if they're close to the buy. Like if you get an uptrend signal right next to your buy, that's going to show a lot of amplitude. I talk about amplitude in a lot of other videos, so make sure, again, just subscribe if you're into this type of stuff. And then you can see just another beautiful uptrend signal right here. And then we had our downtrend signal. Something else I talk about is when our Illuma trend flattens out. When you start to get a flat, that could be like a take profit signal. That could be like a leave on the hedge signal. And then when you start to get more of a choppiness in your Illuma trend, that's when you can actually start to, maybe consider adding to a trade, scaling to a trade, etc. Right? So that's the 45-minute chart, right? So the overall expectancy of the actual trade on the 45-minute chart is negative. But if you're a scalper, man, the 45-minute chart, that's where it's going to be at. Or if you're a swing trader, right? So, if you're doing any type of small position size, like even if you're just trading the coin, this can be helpful for you to do a longer time frame. And you can see that our sample size of trades is so small for the whole year, hence the negative expectancy. Now let's get to like the 15-minute chart, right? So we'll do the same exact back test, 15-minute chart. You can see our chart adapts automatically and we have our signals. So we just stretch the chart out a little bit. And okay, look at that one right there. That's crazy. Huge uptrend signal right there. Same exact strategy. We are going to run the report. Let's just make sure our criteria is all the same. Generate. And now we're looking at a positive expectancy, right? So a positive expectancy is good when you're doing the normal layman's way of signal to signal back testing. Now again, you go down in time frame, you're going to have more total trades, right? And now think about it, with an upward draft in the market, what's going to give you the best advantage on a long and short strategy? Well, it's going to be taking more swings at the plate, right? So more trades. Now you can see a little bit of a drawdown, and you can see a little bit of a, another drawdown, and then a cavernous drawdown, kind of like a triple bottom, and then just bang, it just goes up and up and up, right? So that's cool. Now you can notice here, if you took note or if you want to rewind, you can see the percent profitable. We were like, just below this, right? So like roughly 1 out of 3 trades being a winner. But percent profitable, 30.77%, 10,000% profit, pretty awesome stuff, right? So now let's cut to, the main point, just like we did before. Even on these run-ups, look, where you go signal to signal on the trades that win, you still have the potential before that next signal comes to take a run-up profit, right? So you can see, look at these run-ups, right? So at any point here on the 15-minute chart, when you're getting your signal, so you're just going in, you're adding HappyTrader, you're adding your alert, and you're just setting your alert for, let's say, the 15-minute chart. It's going to do that automatically, once per bar, once per minute, whatever you prefer, as far as alerts are concerned, because your signals are always going to pop up the same. It's going to be the alerts that are going to be either per bar or per minute, right? So don't want to get that misconstrued. For the buy signal, that's going to be our uptrend. For the sell signal, you just set your alerts and then you're good to go. So, with that being said, you just set these alerts even on the 15-minute chart, and you can see that, not only do we have a positive expectancy for the whole year, just showing the power of these signals, but, again, just like with a negative expectancy backtest, meaning let's say the market's going up, but we're also trying to short the market, which is exactly what this backtest is going to do. Either way that you do it, you're still going to have, when you're using HappyTrader, an opportunity to exit the trade. And in many cases, you're getting an opportunity to exit the trade that's already going to be profitable. And you could potentially exit that trade at a higher value than trading from signal to signal. So, what I can say is use what trade small, virtual trade, do whatever you need to do within your learning environment within your risk tolerance, and don't just go throwing futures contracts on for Ethereum. That's not the way to go, because as you can see, if you just buy and hold signal to signal, you might be leaving some profit on the table even on an otherwise profitable trade. And you might be leaving profit on the table where you could have gotten out of a losing trade, right? So with that being said, we can go back to the strategy tester. 10,000% speaks for itself. We'll go down even more granular. Let's go to the 5 minute, and this will be our last one that we'll look at, and that'll kind of conclude the video. And we don't want to get too many people disinterested. So we're gonna, see 14,000%, right? So it goes up, right? So, and a lot of that has to do with volatility. There's a lot of internal quantitative reasons why a long and short backtest with a market upward drift with a minimal correlation between the equity indices and the big indices like Ethereum and Bitcoin can cause kind of a skew effect. But again, let's go, 1,200 trades. We can go to the list of trades, and you can see even on the losing trades, we're getting run-ups. Now, let's just backtrack it. You can see that percent profitable, very similar. Let's go back to that losing one, the 45-minute, very similar, but you can see the difference, right? So on this one with 145 trades, sure, your yearly expectancy, if you're just lazy man's trading it, is going to be bad, because really, I mean, there's just no free lunch on Wall Street. Like, that's the honest truth. But if you have active management occurring within your trades, anybody's going to know to take profit, at $4,800 or way less on one contract. Just realize the contract side, the size that you're trading, and make sure that you take appropriate profit. Make sure that you have rules in place, for virtual trading, for learning this stuff, and just make sure if you do use, any type of trading strategy in real life, make sure you have either hedging or puts or risk management in place of some sort. There's no guarantees in the market, right? So just notice that. We'll go back to the 5 minute chart and just do a final analysis on that. And you can see that, we did have that similar win-loss rate, and we're winning. Our win rate isn't not that crazy, right? But look at our percent net profit just going signal to signal in both directions, right? So the chop kind of gets alleviated a little bit, but we still kind of had like this bottom, 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 and then just bang off to the races, right? So even going short as the market was drifting up at some point, we started to get into a rhythm here with the signals. And again, I'm gonna just continuously drill into this. Have a take profit target. Don't get greedy. Some other things are, make sure that you cut your losers fast and take your winners and run, right? Just the cliches of trading, right? So I wanted to go over that today, long and short. We had a viewer comment about that, and it was a great comment, much appreciated. Gave us a wonderful opportunity to talk about this subject of long only when the market is going up. Obviously, a long only strategy is going to do well, but a long and short strategy, that's the beauty of HappyTrader, is that you can do a long and a short strategy and you can benefit, right? So you can still do well if the market's drifting upward, even if you're shorting the market, right? So it just depends on your trading style, what you're looking to do, and where your profit targets are, whether you're selling options, whether you're trading futures, whether you're looking at just the Ethereum coins or trading a pair. There's going to be variability there, but overall, that's a great backtest video. Thanks again to the viewer who had suggested that we do a deep dive on the long and short. I think this will be a really educational video. Again, my name's Ryan. I'm the CEO and head quant here at HappyTrader.io. Good luck, stay safe, and happy trading.